All right, let's talk what I have my eyes on setting up for probably the next week or two. Of course, chart right now is sitting on Nvidia. Nvidia just had earnings. They beat earnings crazily. So, yeah, obviously watching that because I'm in, a lot of Nvidia positions. But anywho, who cares about Nvidia? Let's start off with our first stock, and that's going to be Caterpillar, CAT. Now with Caterpillar, I think that Caterpillar is in a nice uptrend. It's on the weekly time frame. Let's make this screen a little bit bigger so that you guys can see what's going on. It's on that weekly time frame. Nice little uptrend that we have going on. It retested down here and now it's pushing back up. And I mean, if we're looking at this in a trader's perspective by just zooming the chart in. So when I'm trying to find plays, when I'm thinking of, you know, opportunities or options that I want to, even dive deep into, I'm thinking about things that have a clear direction of where they're going, whether it's up or down. I don't care. I'll play it as long as I can see overall where it's going. And I mean, we see that this was pretty much consolidating. And if you don't know what consolidating is, it just basically means it was ping-ponging within a channel. So if this is an area or a zone, this is consolidation. And of course, you can make this a little bit tighter. You can make the box bigger. It's all up to you. But overall, a box over a bunch of candles that are within the same price range, that is called consolidation. So this is consolidating and has consolidated and finally broke through it. And now that it's through it, it's now in a decent uptrend. So when I'm looking to play this stock, I'm definitely looking at calls. And the reason why I'm looking at calls is because let's take this box off. If we're looking at the EMA and I'm a directional trend trader, so I'm trading trend, I'm trading price action, I'm trading direction, and my EMAs are going up. So it would be pretty much dumb of me to be going against what is happening in the overall trend of things. If I bring it out to the monthly definitely says exactly what the weekly said, that it's going up, that these EMAs are fanning up even more. And the only reason why I would be playing a reversal on these EMAs is if the EMAs were facing downward or looking like they wanted to cross each other. They're nowhere near each other. So that's telling me that I need to be in calls. Now, yes, I am going to have some down moments intraday, you know what I mean? So that's the reason why we play options and we buy our time. So if you buy these for June, you don't have to worry about that theta burn. You don't have to worry about losing much on your option because you have the time on your side. So anytime that you're looking at a stock that is, fluctuating in price or going up and going down, look to see if you can buy time on it, if it's going to go in that direction that you want it to go. Yes, of course, this could go completely south for me, but if I'm looking at my weekly, if I'm looking at my monthly, and then I'll even just put it on the daily, it's not looking like it wants to turn. So I'm going to continue to go with the trend. Now, being that I see that it is red on the day and it was red yesterday, this is going to be my opportunity to buy the options because they're going to be cheaper. The reason why they're going to be cheaper is because everyone's playing puts. I know that I want to be in calls and I'm seeing that it's calls. So I'm going to look for puts when it's dropping. I mean, sorry, I'm going to look for calls when it's dropping. Oh man, all over the place today. So, and I'm going to do the complete opposite for my puts. If I'm looking for puts, I'm going to wait for it to be going up and then I'm going to be trying to enter into my puts because I'm going to get them dirt cheap. Not going to be paying, a high premium when it's actually going in that direction. So, cat calls I definitely like them. Let me see if I can pull up my option chain and maybe spot or see which options I would like to get or which ones I have my eyes on, and then we'll just type it on the chart and go from there. Um, All right, while we're waiting for something to load up, let's look at the next stock. The next stock is definitely Kellogg's. Kellogg's is definitely call territory. So I would be looking for calls on this. Same setup pretty much as Cat. You know, you have that nice bottom tier and is heading up. It never really pulls back. You know, if you are learning or know how to draw trend lines, it hasn't came back to this trend. And each time that it came back to this trend line, it pulled back and it shot back up. So, you know, obviously I want to be, you know, staying in on the call territory. And once again, it's something that was down for the day, maybe down for a few days. I'm going to be looking to play calls, but I want to buy them now. Like I want to buy them while it's down. Worst case scenario is I'm losing a bit while the asset is still coming down, but who cares? You know what I mean? Because I'm going to make crazy money on these calls when they actually do print. And this is another one. This is a slow mover. So you need to definitely make sure you're buying time. And I apologize. It doesn't say Kellogg on the actual chart, but it is Kellogg's. So obviously if you eat cereal or whatever, it's Kellogg's. It's just what it is. So I would look for June's. You know what I mean? You could look for June's, maybe lies. You know, it depends on what you have capitalized. But, you know, a lot of people are getting burned on options and maybe playing out of the money, and it's the lack of understanding your option or what you're doing. The rule of thumb is you should always be playing in the money or at the line. That's at the line. Or out the money, but not out the money, more at the money. So not playing these crazy YOLO plays that are basically wild trades. You know, like you don't do that to yourself, because all you're doing is you're getting theta burn, you know. And people are wondering why they're losing on their options. That's why you're losing on your options. You're playing options that don't make sense. You know, if you want something to be able to have the capability of running $2 or $3, you have to get that time so that it can do that. Because it's like, okay, if we're looking at K and I'm sitting on the weekly time frame on it, I'm gonna look to chart it. So I see a high here. So this is the high, right? I think we all can agree that that is the highest point. Disregard everything on the left side. We're looking at present. And then we're going to say this is the low. So this is basically the channel that it's in. It's either going to blow through this channel or come down. It's only going to do two things: go through or come down, right? But if I'm like, hey, this is a strong chart and this is going to go up, my first target or my first takeout point is going to be right where this high was at, which is at $63, give or take. So I'm going to be looking for either 63, 64, or 65 calls max. I'm not going to go for 70s. I'm not going to go for 80s. And the reason why I'm not going to do that is because in my head, because this is how I'm going to trade it, in my head, it makes sense that this asset could go $3 more within 2 months or within a month, because that makes sense to me. Saying that something is going to go $10 to $20 and it's not a stock that's capable of doing that, you're just gambling at this point. So we don't gamble at Queen of Trades. We make strategic plays, A plus setups. So our A plus setups are going to be directionals. So things that are going in that direction, and then we're going to buy time for it. And then we're going to sit, we're going to eat some pancakes because, you know, Queen of Trades, we love pancakes. So we're going to sit and eat our pancakes, and we're going to let our trades cook for us. So what that means, if you guys don't know my little slogan, is I'm allowing it to play out. I'm allowing it to get that 200% because I already know that it's going to make its move. I'm confident enough that that's going to happen. But in order to have that confidence, you have to have that time. You can't sit here and play these weeklies and think, yeah, it's going to get there. And the stock doesn't even move that much in one day. So understanding what a stock is capable of doing, even before you make your bet. All right. Right. So you got CAT and you got Kellogg. I'm not really a big fan of CABA. It's bio. So it's more of that pharmaceutical stock. They move very erratic. So you're going to get real impulsive moves and get real impulsive drops. Not an option that I would like to play. So I'm going to skip that one. My next setup is going to be Apple. Everyone loves Apple. I mean, I think everyone has Apple. At least everyone in this house has Apple. So Apple is at a crucial point. Here's a high right here, and we're looking at the weekly. You know, this is heading to this few weeks ago high. Now, do we need it to break that high to make money on the option? Absolutely not. We need to just go up. So if we're going to bet, we're going to go for June contracts. Like I'm giving you the master plan on strategically playing your options. We are in the month of May, look for Junes. When you're in Junes, look for Julys. When you're in Julys, look for August. It's simple. Don't overcomplicate playing options. And the reason why you're buying this time is because it allows that intraday noise that's going to happen, whether it's the Fed numbers, whether, you know, somebody is selling off shares. It's going to allow that movement to happen, and your contract is not going to be worthless because we don't want a worthless contract. Okay. So buy time. I repeat, buy time. So we see here on this line, Apple, that's 200 at that line. So yes, we can go play June calls, or we, you know what I mean? Or even if you're like, you know, I don't even feel comfortable with playing June calls, let me play July calls. 200s are fine. Now 200 is $10 away from where it's at now. But we know that Apple can move basically $10 in one day. So pretty much can happen. So that one is different than Kellogg's. So trading that strategically, thinking about it, it's all different. So Apple calls sometime in June. Look at the 200s. Your next play is going to be CRM. Now, if you noticed, I'm not flipping from chart to chart to pick plays. And the reason why I'm not doing that is because I don't need to do that. If I understand what a trend is, if I understand what the momentum is, if I understand where the buying pressure is, I don't need to flip from chart to chart to basically assess and give me the answer that I already know. If I understand how to read a weekly time frame, then I can basically trade it directionally the way I feel it's going to go. Now, yeah, I could be wrong with it sometimes, but the rule of thumb is if you trade the EMA, look at the EMA as lines that are guiding you to the direction it's going. If it's going up, then you should be playing calls, and if it's going down, you should be playing puts. Just make it simple. If you make it simple, it doesn't complicate things for your trades, and you're a little bit more successful with your trades. Now, my only concern with CRM is it has earnings on Wednesday, the 29th. So as of right now, this would not be a play that I would even want to get into because I don't want to get into a play like this, right? Excuse me, close to earnings. But after earnings, of course, if it has that continuation of still showing strong upside, yeah, I'm gonna play calls on CRM. So CRM is on hold until after the 29th. So maybe the 30th or the 31st, I'd be looking for some calls on it. Provides earnings, if it doesn't beat earnings, I'll move on from it. I'm not married to these stocks. So if as of right now it's in play, but if it's something where it has bad earnings, then it's not in play. And I'm okay with that. I'll move on. My next stock is going to Starbucks. Um, as I stated in a video prior, our Discord has been playing Starbucks for a while. Starbucks is definitely going to be calls sooner than later. What we're seeing right now on this daily time frame for Starbucks is Starbucks was in a major downtrend. So there's your trend line. I'll take those EMAs off. And as of right now, this is not a play that I would want to get in. This is a play that I have my eyes on. I really need Starbucks to break through this trend line. So we're talking like $87 Starbucks needs to be at for it to even be playable for me. Because it could easily come up to this trend line and reject it and come back down, just like it did here, here, here. So I need to have that confirmation that it's going to continue to go. And if I'm expecting it to continue to go, my target for it would be up here, which is 107. But it needs to break that $87 before it becomes the 107 in play. If I'm looking at it from the weekly perspective, it's still the same thing. This is no long play until it breaks that trend line. Because once it breaks the trend line, this is a new trend because now we're in a downtrend now, and then it will be in an up. Of course, yes, it's great to enter on these a little bit early. But even as I stated earlier, yeah, I would love to enter it early, but this is too early. I need it to show some sort of breakage through that trend line. That's still an early signal for it to see some upside. Now, disregard whatever is on this screen because I wrote this out weeks ago when I was looking at it. I mean, it's all good information, of course. They give dividends. The actual options I was looking at, and once again, there's that date, that June. We're in May, and I'm looking at June contracts now. At the time that I charted this, those contracts were 11 cents. So let me see what they are now. So June 21st, and they're $90 contracts. Oh, probably should have got them. These contracts are now $30. So yeah, even though I said, it's still not in play right now, and it really still isn't for me. But if I would have gotten these at $11, I would be up because they're now worth $30. It's just sometimes you get distracted and you forget the things you chart. It happens. I have a lot of stocks on my watch list that I'm looking at that are setting up. So this is on me. But if you guys want to play these $90 calls for June 21st, they were $11. They are now $30. So they're good plays. I'm a little mad now that I'm looking at this, but I mean, it is what it is. It happens. You're not gonna get every play that you chart. And being that I chart a lot, it's just not gonna happen. It is what it is. But Starbucks definitely is in play. I would like Starbucks to break 87. And then I would be looking at those 90 calls. I may enter in them on Friday, but I will be going for those June 21st calls, and they will be $90 calls. So whatever they are on Friday, hopefully they are $11, but I highly doubt that they will be. I'm going to be looking to get those plays. So that is definitely a good play. Microsoft. I've been talking about Microsoft for days now at this point. I'm tired of hearing myself say Microsoft, but Microsoft is crazy bullish. I have not found uh an option that I really, really want, even for June. I'm gonna still keep looking. And that's just because Microsoft is playing around with that 428, 431 mark. I need it to break. And I mean, as we can see, even right here, we're looking at it. And in my opinion, it just needs to break this level before I'm looking for, higher contracts. Because of course, even though I said earlier that, you need to be playing in the money or at the money, I absolutely love playing out the money contracts. It is, I guess, some sort of adrenaline rush that I need, but it works for me. But the way I do it is not like no other. Other people can try to get the same contract as me or try to play that same play and they won't be so as successful as I am. It's just something I'm really, really good at. So you don't break things that aren't broken. So I won't change that. So I am looking for more Microsoft out of the money calls. But I haven't found a strike yet. My other one that I have not found a decent strike for is Google. Google, I think, is setting up very well as well. But I mean, I think that Google is underpriced. That's just my opinion. But Google is showing, some strength. It showed the downside, it showed some upside, and it's kind of pinned right here. And what I mean by pinned is it's stuck and it's not really moving. This is the weekly candle. So there wasn't really much action. I mean, that's a doji on Google for the week. It's 50-50. Buyers and sellers they're just 50-50. So another one that needs to at least break the 179, breaks that 179, we could see at least 190, 200. Some cheapies for Google, which of course June is the date, would be the 200s calls for June 21st. So I'm going to write that down so you guys can see it. What I'm looking at are Google, $200 calls. I can't type for anything. Wow, that's crazy. And I'm looking at the 621. Right now, as this is being taped, they are 16 cents. So the cheapies are great. As you can see, they play out nicely. Starbucks was a beautiful example. This one isn't going to break the bank. A lot of people aren't too convinced on playing options or putting that much money into an option. But the mindset is if you're gonna go and buy 100 of these, just take that amount that costs that 100 of those and just go deeper into the money so that you're closer and you make money quicker. But some people just don't do it that way. Like I said, I like to buy multiple of these, which I plan on doing, and I will be doing that on Friday. I will be buying more of these contracts. Like I said, I enjoy the cheapies, but I also will be buying some 175 calls also for June. So I am going to buy my in the monies and I'm going to buy my out of the monies as well. But this would be a nice play for anyone that has a small account, I would say, and is just trying to grow their account. One trade at a time to grow your account, win the trade. And what that means is as soon as you go green, cash that out and then get into another trade or get back into it. It's a rinse and repeat type of situation. And let your profit go back to the market. It is not your money until it's in your buying power. And if you have that mindset of knowing that it's not yours until you can spend it, you're going to catch those contracts a lot sooner than others. People are going to sit and be depressed and upset because they're losing on trades, but they're losing on trades because they're just not taking the profit. So you don't lose taking profit. Just remember that. So our plays that our eyes are on are Microsoft. I do not have a play for that, so I will have another video come out. Google. I don't have a play for that, so I will put out a play for that. Kellogg's, Apple, and Starbucks. Starbucks play for the $90 call for the 6th of June or June 21st is going to still be in play. I might look for another contract when I do another video for maybe Microsoft, but to be honest, those are fairly cheap. You know, it's $30. So these are my plays that I'm looking at. And obviously, Discord members, if you are watching this, you guys will get my plays, you know, just as fast as I put those orders in. So don't worry about that. But anybody else that isn't part of the Discord, you know, you should come over, check us out, you know, make some money with us. We enjoy everybody and we just enjoy money. So my thing is, if you enjoy making money, you probably should be over on our team. And if you don't, and you just want to watch the videos and hope that I get plays in there, you know, that's good too. You know, views, I enjoy views, and definitely make sure that you hit that subscribe button to make sure that you're getting alerted when I put out new videos. That's the only way that you're going to get the plays that I'm possibly in, or even plays that I'm thinking that are good plays, is being a subscriber. So until next time, stay green with Queen.